Assalamualaikum warahmatullahi wabarakatuh. We are from Group 18. So first of all, I will introduce my team members. My team consists 3 members, including me. Firstly, I am Ilana Nadira binti Muhammad Ruzi, and my team members are Nurin Hazwani binti Muhammad and Ifa Kayyisah Wafa binti Saiful. So today, we're gonna present about analysis performance of Petronas Chemical Group Berhad and Public Bank Berhad. These two are from different categories, which are bank and non-bank. These are the contents for our presentation. Firstly, we can talk about business profile, products and service, company and bank performance, relationship between performance and share price, comparison and ASP analysis.
So the first company we have Petronas Chemical Group Berhad, which is founded in 1985 and was located in Kuala Lumpur. There's like 19 manufacturing sites located in Malaysia and other countries such as Netherlands, Sweden, Singapore, Germany, Italy, China, the USA and Canada. And the products that they offer is like olefins, polymers, fertilizers, ethanol and specialty chemicals. They also serve some services like technical support, help and advice on product use, safety and compliance. So firstly, we need to know what is company performance is. So company performance refers to how well a company achieves its objectives, goals, and overall success in its operations. It encompasses a variety of metrics and indicators that provide a comprehensive picture of a company's health, efficiency, and competitiveness. So in company performance, we will look at first profitability ratio, which are return on total asset and return on total equity. Secondly, we will look into leverage ratio, which consists of debt to assets and debt to equity. And lastly, we have efficiency ratio, which consists of asset turnover and free cash flow.
Firstly, profitability ratio. Return on total assets measures the company's ability to generate profit from its total assets. In 2019 to 2021, the return on total asset decreased from 7% in 2019 to 40% in 2020. This decline indicates a drop in the company's profitability relative to its asset base, possibly due to lower net profit or a slight increase in total assets. Return on total assets significantly increased from 4% in 2020 to 18% in 2021. Then the return on total asset decreased again from 80% in 2021 to 11% in 2022, while still higher than the previous years, which is 2019 and 2020. This drop could indicate reduced profitability or increased asset base, affecting the ratio. The return on total asset further decreased from 11% in 2022 to 3% in 2022. Next is return on total equity. This ratio measures a company's ability to generate profit from its shareholders' equity. The trend analysis is decreasing from 2019 to 2020. This suggests a decline in profitability relative to shareholders' equity, potentially due to a significant drop in net profit while equity remained relatively stable. In 2020 to 2021, ROE increased dramatically from 5% in 2020 to 24% in 2021. This significant rise indicates a substantial increase in net profit. Then in 2021 to 2022, the trend decreased back from 24% to 16%, although still higher than previous years. This drop suggests reduced profitability relative to the increase in total equity. Further declines keep occurring until 2023. Leverage ratio, debt to asset, to measure the proportion of a company's total assets that are financed by its liabilities. The debt to asset ratio for Petronas Chemical Group Berhad has shown a consistent upward trend from 2019 to 2023, increasing from 0.21 to 0.30. This indicates that the company is increasingly financing its assets through debt. Petronas Chemical Group Berhad has shown a consistent upward trend from 2019 to 2023, increasing from 0.27 to 0.43. This indicates that the company is increasingly relying on debt to finance its operation and growth. To measure the efficiency ratio, we need to know the asset turnover ratio. Asset turnover ratio for Petronas Chemical Group Berhad has shown variations from 2019 to 2023, with a notable improvement in efficiency during 2021 and 2022. The slight decline in 2023 still reflects a higher level of efficiency compared to the initial years of the analysis. For the free cash flow, Petronas Chemical Group Berhad has demonstrated a consistently strong and free cash flow over the past 5 years, reflecting effective financial and operational management. The company has managed to increase its free cash flow year on year, peaking in 2022 and slightly decreasing in 2023, but still maintaining a high level. Relationship between performance and share price of company Petronas Chemical Group's Berhad. The share price of a company is often influenced by its financial performance, operational efficiency, market conditions, and investor sentiment. Analyzing the performance metrics of Petronas Chemicals Group alongside the observed share price trends can provide insights into the relationship between these factors. The significant drop in share price in yearly 2020 corresponds with a decline in both revenue and net profit, indicating that lower profitability adversely affected investor confidence. The recovery in 2021 aligns with a substantial increase in revenue and net profit, driving the share price higher. Meanwhile, the decline in profitability in 2022 and 2023 likely contributed to the decreasing share price, reflecting investor concerns over sustained earnings.
So now I'm going to share a few about public bank backgrounds. So public bank was founded in 1966 by the late Tan Sri Dato Sri Dr. Teh Hong Pio. It's first branch located at Jalan Gereja, Kuala Lumpur. So public bank provides a comprehensive suite of financial products and services which include personal banking, commercial banking, Islamic banking, investment banking, share broking, trustee services, and as I mentioned earlier, public bank has many services and products, which is the first one, we have saving account, current account, business loans, Islamic banking services, securities trading, and trustee service.
So next we go through to the public bank Berhad performance. The return on total asset (ROA), there just only slight decrease occurred in 2020 due to COVID-19 impact. The overall trend in ROA for public bank Berhad from 2019 to 2023 is positive, indicating improved profitability and better asset utilization over the period. This trend reflects the bank's resilience and ability to adapt to economic challenges, particularly the recovery from the adverse impacts of the COVID-19 pandemic. The return on total equity, or we can call it as ROE. The ROE for public bank Berhad from 2019 to 2023 shows resilience and recovery in profitability, particularly after the impact of the COVID-19 pandemic in 2020. The consistent ROE around 11% to 12% in the subsequent years indicates strong financial performance and efficient equity utilization, highlighting the bank's ability to generate substantial returns for its shareholders. In the context of a leverage ratio, which is debt to asset, the overall trend from 2019 to 2023 shows a stable debt to asset ratio, fluctuating between 0.89 and 0.90. Secondly, debt to equity. The overall trend from 2019 to 2023 shows fluctuation in the debt to equity ratio with a general downward trend, especially noticeable in 2023. The ratio remained relatively high, reflecting the typical structure of banks that rely heavily on debt financing, but the slight downward trend indicates a move towards better equity management. In the context of efficiency ratio, which is asset turnover, public bank Berhad experienced a decline in asset turnover ratio from 2019 to 2021, indicating decreasing efficiency in using its assets to generate revenue. However, the trend reversed slightly in 2022 and improved significantly in 2023. For the free cash flows, public bank Berhad has exhibited significant volatility over the past 5 years. Initially, the company faced negative free cash flows in 2019 and 2020 due to high capital expenditures and increase in net working capital. However, the situation improved in 2021 and 2022 with positive free cash flows, indicating better cash flow management and reduced capital expenditures. Unfortunately, the trend reversed in 2023 with a negative free cash flow, mainly due to a substantial rise in capital expenditures. The relationship between performance and share price of public bank. Despite some positive financial metrics, the share price of public bank has decreased by 12.18% over the past 5 years. This decline attributed to various external factors, including market conditions and economic environment. For sure, the share price declining in 2022 to 2021 due to COVID-19.
So let's move on to the next part, which is the comparison part, where we compare Petronas Chemical Group and public bank performance.
So now we are going to compare between Petronas Chemical Group and public bank. And we have three things to compare. The first one is profitability ratio, leverage ratio, and efficiency ratio. Next, profitability ratio. So we have two. The first one is return on total asset. As you can see, Petronas Chemical Group and public bank Berhad from 2019 to 2023 have differing numbers, which is it's not always decrease and it's not always increase. So the next one is return on equity. As you can see, from 2019, Petronas Chemical Group have 0.09 until 2023 we have 0.04, while Public Bank Berhad during 2019 have 0.123, and during 2023 we have 0.118. Next.
So next we have leverage ratio for both company, and the first is debt to asset, where we can see Petronas Chemical Group has an upward trend from 0.21 to 0.30 from 2019 to 2023, while Public Bank Berhad, on the other hand, has a consistent trend where we can see from 0.90 to 0.89 from 2019 to 2023. And the analysis shows that while both PCG and public bank have seen different trends in their DA ratios, these trends are consistent with their respective industry practices and strategic goals. PCG's increasing DA ratio reflects strategic borrowing for growth, while public bank's stable high DA ratio is typical for the banking sector, emphasizing stability and regulatory compliance. So next we proceed to debt to equity for leverage ratio. As you can see, Petronas Chemical Group have an upward trend from 0.27 to 0.43 from 2019 until 2023, while Public Bank Berhad has a downward trend that goes from 8.97 to 8.06 from 2019 until 2023. The comparison of debt to equity ratios between Petronas Chemical Group Berhad and Public Bank Berhad from 2019 to 2023 highlight their distinct financial strategies aligned with their respective industries. PCG's increasing DE ratio points to a strategic use of debt for growth and expansion, indicating higher leverage but potential higher returns. In contrast, Public Bank high but slightly decreasing DE ratio reflects the typical high leverage of the banking sector, emphasizing financial stability and regulatory compliance.
Petronas Chemical Group demonstrates stronger asset utilization efficiency with higher asset turnover ratios throughout the period. The upward trend, despite a slight decline in 2023, indicates effective management of asset to generate revenue. Public Bank Berhad has lower asset turnover ratios consistent with the banking industry norms. The slight recovery in 2022 and 2023 suggests improving efficiency, but it still lags behind the manufacturing sector's performance, as seen with Petronas Chemical Group. Petronas Chemical Group displays a generally upward trend in free cash flow with a slight dip in 2023, suggesting solid and stable financial health. Meanwhile, Public Bank Berhad shows an erratic trend with major improvement in 2021 and 2022, but a relapse into negative free cash flow in 2023.
So for analysis and performance, we have changes in asset. So for the growth trends, we have Petronas Chemical Group has a significant fluctuation in asset growth, a substantial increases in 2020 and 2021, and slow growth in 2022 and 2023, while Public Bank Berhad has a stable but slower growth in assets and a minor fluctuation with a consistent rate of increase. Secondly, sector differences, where Petronas Chemical Group has a larger variation due to investment in new facilities, technologies, and equipment, while Public Bank Berhad has more stable asset growth due to conservative asset management and regulatory requirements. And lastly, we have performance insights, where Petronas Chemical Group has a substantial asset growth in certain years, indicates aggressive expansion and investment strategies, a potential for higher returns but also higher risk, while Public Bank Berhad has a steady and consistent asset growth, reflects cautious expansion, a potential for stable returns and low risk. So to conclude, Petronas Chemical Group Berhad has a dynamic variable asset growth, indicative of aggressive investment and expansion strategies, which beneficial for rapid growth but may carry higher risks associated with large capital expenditures. While Public Bank Berhad has a steady, conservative assets growth, reflecting stable and cautious assets management practices, which can lead to consistent performance and lower risk. So for analysis and performance, we have changes in asset. So for the growth trends, we have Petronas Chemical Group has a significant fluctuation in asset growth, a substantial increases in 2020 and 2021, and slow growth in 2022 and 2023, while Public Bank Berhad has a stable but slower growth in assets and a minor fluctuation with a consistent rate of increase. Secondly, sector differences, where Petronas Chemical Group has a larger variation due to investment in new facilities, technologies, and equipment, while Public Bank Berhad has more stable asset growth due to conservative asset management and regulatory requirements. And lastly, so next we have changes in loan, where as we can see from 2019, Petronas Chemical Group has 15.51%, 2020 41.82%, 2021 25.48%, 2022 5.90%, 2023 34.46%, while Public Bank has 2.83% on 2019, 2020 they have 8.96.88%, 2021 they have 2.60%, In 2022, they have 4.36%. And lastly, on 2023, they have negative 7.53%. So that's all from us. Thank you for your time and thank you for listening.